As we kick off a new trading week, the major U.S. stock averages are in negative territory. We're seeing basic materials and financials lead the way lower. Joining me at the beginning of the week is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, after last week's record run in equities, we're seeing downside pressure for the majors. Now, ahead of this week's jobs report, all focus is on the Fed as well as geopolitics. But what do you think is behind today's pullback?
Well, I think the market is finally beginning to realize that the era of cheap money is about to end and probably is going to end this month. And we'll probably see a series of interest rate hikes this year. Now, of course, the market has gone up, as we mentioned in the past, basically on a lot of euphoria due to the Trump program, pro-growth program. And of course, that could be a major battle for the administration. And so I kind of think reality is beginning to set in. While I don't think we're headed for a major correction at this time, I think a pullback of maybe 2 to 3% is quite possible. I wouldn't rule out the S&P going back down towards that 2,300 level. And of course, this week we have the unemployment data. We're looking probably at a growth rate of 190,000 plus in non-farms, with the unemployment rate probably ticking down to by a tenth of a percent to 4.7%.
And ahead of that jobs report, we'll continue to monitor geopolitics as well as politics. If you look at the trading action in the foreign exchange market, we're seeing mixed trading for the U.S. dollar. And earlier today, we saw some safe haven demand for the yen, and we saw the euro dragged lower by concerns about the outcome of the French elections. So how are you factoring those potential risks ahead of this week's jobs report?
Well, I think the dollar will probably continue to strengthen. I think we're looking in terms of the dollar index somewhere between 103 and 105 before we see a reversal. Now, as far as the euro is concerned, obviously the euro is a little pressured by the strength of the dollar. But I think the great fear for the euro right now is the upcoming French elections. And if we should see the polls swing in favor of Le Pen, then I think, parity or perhaps sub-parity against the dollar versus the euro is on its way. And so, I think the economic numbers support a stronger dollar.
Okay, Peter, last but not least, before I let you go, I do want to talk about oil prices. Now, today we're seeing range-bound trading again for oil futures, and that's not surprising given that the fundamentals haven't changed. But we did get some data regarding Russia's production cuts or lack thereof. So do you expect to see range-bound trading heading into the next quarter?
Well, I think oil prices are destined to move higher. I've been saying that all along. Unfortunately, what we're seeing here is a market that's stuck in a very tight trading range, somewhere between $52 and $55. Reason being is, we had a huge buildup in stockpiles, but over the past 2 weeks, the magnitude of those increases have decreased, and that's probably a good indication that we're nearing an end of this massive buildup in inventory. Sometime in the first half of this year, we're going to see prices closer to 65 as opposed to maybe 45 or 50.
Okay, Peter, well, thank you so much for joining me as usual, and thanks for insight and analysis.
My pleasure.